Hello, everybody, and welcome back. India has recently gained favor with international investors. Why is the Indian market interesting, and what opportunities are available there for international investors? We talk about this with Peeyush Mittal, lead portfolio manager of the Matthews India Fund. A warm welcome, Peeyush.
Thank you, Thomas, for having me as your guest. Looking forward to the interaction.
Peeyush, the recent troubles of the Adani group led to foreign investors selling Indian stocks. What does India need to do to restore the confidence for global investors looking to invest in India?
I would actually disagree that recent Adani group saga has had any lasting impact on the investor sentiment, towards investing in India. If you look at the market, it did correct in the first week when the news of Hindenburg report broke, but in the subsequent, couple of weeks, market was actually back to 3 weeks back. So we don't think there's been any lasting impact. If anything, we think, what it has demonstrated is to the global investors is that the financial system in India continues to be extremely robust and strong, contrary to maybe what the popular perception was. The regulator over the years has actually done a tremendous job in terms of reducing the corporate level exposures, individual exposures on the private and the public sector banks. And if anything, the Adani incident was a stress test for the financial system. And the financial system, in our view, actually passed with flying colors. So if anything, we think, the event has increased the confidence of global investors, in the financial system that exists in India, as today.
Hi there. Just a 2-second break. Before we continue with the video, just make sure to subscribe to our channel now to not miss out any updates. Thank you very much and enjoy the video now.
So where do Indian equities perform better when compared to other emerging markets in the region?
We think there are 3 or 4 factors, why Indian equities are better. Number one, I think there is far more political stability and continuity that exists in India compared to some of the other emerging markets. If you look at Mr. Modi, he's been the prime minister of the country for 9 years. So that itself, presents a lot of continuity in economic policies, which might not be the case, compared to some of the other countries like Brazil. And Mr. Modi has been steadfast in his focus on, creating economic development in the country, trying to create more jobs and increase the per capita income at even the bottom of the pyramid. So far more focus on economic development of the country than other agendas like, raging a war and stuff like that. The second thing I would say is monetary policy in the country has been fairly conservative. The Reserve Bank has done a very good job in terms of not having the real rates being negative for an extended period of time. That itself means, the currency has been far more stable than some of the other emerging markets. So that's the second thing, which I think is better. Third, I would say just the growth itself, the focus on manufacturing, coupled with geopolitical situation, narrative around China plus one, all those combined, and India being a very domestic economy, right? Export component is far smaller than some of the other emerging economies. That itself means I think the country should actually continue to grow at least 5 to 6%, much better than any other emerging market, in the world. And lastly, I would say it's a very deep market. The depth and breadth of choices that you have amongst all the sectors which are present is equal to China in that sense, and possibly better than any other emerging market. So the only market that would compare would be China, and better than every other emerging market in the world. So all those things I think make it India an attractive destination amongst the emerging markets.
How will a global economic slowdown and especially a US recession impact India's equity investments?
We do think there will be a negative impact on the GDP growth in India if there is a global slowdown and there's a US recession. But in our view, that impact would be far smaller than what is, perceived amongst global investors. Number one, I think, India has 20-25% of GDP, which is driven by exports. So to the extent that you have global slowdown, will have a negative impact on GDP. But if you look at the current geopolitical situation with, more and more manufacturing shifting to India, China plus one rhetoric, I think all that will mean that the impact will actually be lower than what might be, perceived, because there are some other structural tailwinds which will, nullify the recessionary headwinds. The second thing is, if a recession were to happen, I would expect inflation will come down. That by itself will likely improve the consumption which exists at the bottom of the pyramid. So rural economy in India has been fairly weak. We expect inflation comes down, rural economy will be improving, and that will potentially be a positive impact on GDP. And then lower oil prices, lower inflation will mean, there's a far more predictability of monetary policy going forward, which by itself will have, some amount of stabilizing impact on INR. And that also will create a positive investing environment, in India going forward.
India's inflation is showing signs of easing. So how does this present an opportunity for equity investors?
The high of inflation last year was roughly 7.5%. Most recent reported number for Feb 2023 was 6.4%. So while it has improved, but inflation continues to be outside the comfort zone of Reserve Bank of India, which is 2 to 6%. So to that extent, we think, there is further monetary policy hike, which should happen going forward. And with the narrative around Federal Reserve also currently of further hikes, we think the same will happen even in India. However, if you look at the WPI has corrected from highs of 10-12% to actually the most recent reading was close to 3%, right? What that means is the hard commodities have corrected tremendously, steel and the aluminum. And that presents, an opportunity for margin improvements in sectors like auto and capital goods. And I think those should be places where you should see good earnings growth despite some weakening demand supported by margin expansion. So we think there should be some opportunity to invest, in those sectors on back of, inflation going down.
You already mentioned some of the sectors. Are there other sectors that investors should keep an eye on in 2023?
Certainly. I think, with the China plus one rhetoric and the focus that India itself has on Make in India, we think there are certain sectors where you are beginning to see, export-led optimism and signs on the ground that, growth should actually be better. So things like specialty chemicals, upstream pharmaceutical sectors, which are more B2B relationships, so API manufacturing, intermediate manufacturing, some of the contract research businesses. So we do think, there is good opportunity that exists, and growth should be sustainable, and if anything might actually accelerate, going forward from here.
India's Sensex recorded a PE ratio of 23.2 the first week of March, much lower than the all-time high of roughly 36 in February 2021. So do you think this presents a value investing opportunity and buying opportunities?
We actually don't think there exists value opportunity in India. We've been actually out there telling our clients that India continues to be an expensive market, and we've been at it for at least last 6 months. While the headline PEs have corrected and look more in line with the last few years, but if you were to look at the equity risk premium in the country, adjusting for the monetary policy hikes that we've seen, equity risk premium in India continues to be actually pretty low. So if that has to normalize, either rates have to correct or stock markets have to, the valuations have to moderate. And we don't think, interest rates are going to go down in a hurry. So the only other, lever that has to give is equity valuations have to, come down even further for equity risk premium to normalize.
India's recently announced budget has allocated higher funds for infrastructure. So what are the opportunities here for international investors? How can I benefit from this trend?
So rightly so, I think India's has increased the infrastructure budget by 33%. One of the focus that Mr. Modi has is to bring down the logistics cost in the country from current 12-13% to maybe 7-8%, which is the norm globally. We think it presents an opportunity for good growth in sectors like capital goods and building materials sector. However, the only caution I would make is some of these sectors have actually performed really well over the last 12 to 24 months. So valuations might not be cheap. The only caveat I'll make, one subsector within building materials, cement, does look attractive to us. Cement has not performed well over the last 12 months or so on back of reduced margins because energy prices were really high. So as demand improves on back of infrastructure spend, that itself will bring some pricing power, and then reducing energy prices globally should lead to very good EBITDA growth for cement companies. So we think there is some opportunity to invest in the cement sector on back of this infrastructure push that we're seeing.
So many international investors mainly invest in Indian large cap stocks. So where's the opportunity in small and mid cap stocks that you're currently observing?
So we actually don't think mid caps might be the right place to be. Mid caps, in our opinion, continue to be the most expensive part of the market if you look at it from a historical perspective. Small caps, while it might be a little too early, but small caps have not performed well over the last 12 months, have actually underperformed, down close to 20-25%. Valuations are normalizing there. And given that the headline large caps, in our view, should continue to see downside, we expect some further downside for even small caps. But having said that, we think going forward from here, small caps should present opportunities. Some of the themes that I was highlighting on cap goods, on upstream pharmaceuticals, within specialty chemicals, there is a lot of choice that you have in the small cap space. So for an active fund manager who's looking to get his hands dirty, I think India is the best place to possibly do so, given some of the structural changes that we are seeing in the economy. There's many companies in the small caps that you can look to evaluate and potentially invest going forward.
So this was Peeyush Mittal from Matthews Asia. Peeyush, thank you very much for being with us today and sharing your insights into the Indian stock market and current developments.
Thank you, Thomas, for having me. It was a pleasure interacting with you.